So in this slide, I also want to talk about float selections. We talked about market cap selections. Market cap, the ideal range will be 20 million to 200 million. High risk under 10 million. No risk, no return. That's above 200 million and over 1 billion, not tradable. So just review that. For float selections, 0 to 1 million is considered to be nano float. This is going to be the worst float you are going to be short or long, because nano float included, in a really rare situation, somebody can purchase the entire float and leave a very small amount of float for retail to trade. And the retail, they can dump it anytime they want, and also they can manipulate it to cause more short squeezes. And those short squeezes or dump is pretty dramatic. One candle can pull 20-30% just in 1 second. So if you don't have a really good risk management and don't know how to control your size, this is going to be your worst nightmare to trade, especially going short. Going long, also do not recommend that at all. I have seen people getting caught in those nano float once they get T1 or T12. If they get investigated in the NASDAQ after hours, or they did an offering in the after hours. Lower floats, they require low liquidities. So that means 100K shares can pretty much pull 50% from the high. And that is not something you want to get caught into. So for beginners, personally for me, I avoid if the flow is under 1 million. Now 1 million to 3 million is considered to be a micro flow. Micro flow is okay to trade as long as it forms massive consolidations before the momentum shift. This is where you have to trade on a multi-day rounder level. If you are shorting them in a gap up short, do not recommend, because gap up short do not require any resistance. If you do not see any resistance and you're trading a micro flow between 1 million to 3 million, this is going to be very difficult. Same thing, the candles are going to be aggressive, not as aggressive as the nano flow, probably 10 to 15% in one candle within 1 second. If you get squeezed, it can pretty much instantly shake you out. So you have to be really experienced trading between 1 million to 3 million. And also shares are also hard to borrow, so you're going to spend decent amount of money on the borrows. And also if you do not know how to manage risk and how to really size in, you will end up with double loss. First loss will be borrow fees. Second loss will be you don't know how to really manage the risk. So something that's going to be another nightmare for beginner traders, not as bad as the nano flow, but it's going to be difficult. Now 3 to 10 million, this is considered to be a low flow, and this is, I would say, a good fit to trade for all short patterns. I'm going to go over 3 to 4 very profitable short patterns later in the slides, but between 3 million to 20 million, I think it's a good fit to trade all short patterns. First of all, the candles are not aggressive, pretty much anywhere between 2 to 5%, and it's okay to size in. I would say if they trade a massive amount of volume, and it's okay to size in into those floats, because first of all, candles are not aggressive. Second, large flow do require larger liquidities. And in this case, if you want to size in anywhere between 30K shares to 100K shares, it's definitely okay to do that, as long as you don't exceed the maximum amount, which I will be talking about later on the slides. And then you will be looking at 20 million to 50 million float, and this is normally to be not considered as tradable float. But if the stock starts with a really cheap price, if it's under $1, reference for the CEI, this is the ticker that we traded in 2021. I think I made about 700,000 to 900,000 on this ticker. If they start anywhere between 10 cents to $1, and they gradually goes into parabolic and trades more volume than the previous day, and this is an okay flow to be traded in, but it has to start with a really cheap price, under 1. If it starts anywhere between 5 to 10, then I don't think it's really tradable. Over 50 million float, I do not think it's tradable. I think around 50 million it is okay. If it's over 100 million and it does not start with a cheap price, if it's above $3 and the flow is over 100 million, 99% of the time the stock will not likely to move, and it needs to trade 400, 500 million volume in 1 day to be able to gain 50%, 60% in 1 day. So it has to be a multi-day runner up to 5 or sometimes even 2 months to be able to qualify the dollar block and it becomes tradable. So over 50 million flow does not qualify as an intraday trade patterns. So keep that in mind that your most profitable range will be 3 to 20 million, and 1 to 3 million if you're experienced, 0 to 1 million you're just looking for troubles. So those are the criteria for the flow selections. I have explained what is tradable, what is not, what is dangerous, and if you're a beginner, make sure to select between 3 to 20 million. Very important.